Fitbit shares officially going public on the New York Stock Exchange, making it one of the first companies focused on wearable devices to be publicly traded. But what kind of influence will Fitbit have on the future of that market, especially in light of how its stock performs? Well, joining us now to talk about that is CLSA Senior Analyst Ed McGuire. Ed, great to speak with you today.
Great to talk to you, Morgan.
So Fitbit's competing with a higher-end Apple Watch. It's also competing with a lower-priced fitness band from Xiaomi. You've got products from Garmin, Google developing products, Jawbone. Where does Fitbit sit in within this burgeoning industry? How is it positioned against those competitors going forward?
Well, it's a very competitive industry. By one source, there are over 140 competing products in the wearable fitness category, but they come out of the gate as a public company with the highest brand recognition in the market. In fact, they've almost become a generic. People talk about wearing a Fitbit, so that's a big advantage. They have, by some accounts, 85% share in a market that's in the U.S. market, and globally it's about a $1.6, $1.7 billion market. But they have competition at the high end from smartwatches coming from Apple, from Garmin. Google Android Wear is on a lot of different types of devices, and of course, coming from China, Xiaomi is entering the market with $25 to $30 price point fitness bands. So this could present a lot of competitive forces. What Fitbit has is their brand and a user base that's actively engaged.
And you just mentioned that by some counts, Fitbit has as much as 85% of market share. That this is, I think, a $1+ billion industry right now. How much do you expect it to grow? And what kind of, I guess, what are the biggest threats in terms of competition to Fitbit if it has that much market share?
Sure. Well, now this is a market that's forecast to grow, very rapidly in terms of units. We're seeing revenues for Fitbit were up almost 200% last year. But the market's forecast by industry sources to grow revenues somewhere in the high single digits because you have a lot of price erosion at the low end. So, for Fitbit, their biggest challenge is to be able to fend off these low-cost competitors with an experience that's differentiated enough that'll keep users engaged and certainly fighting off the high-end smartwatches, which are subsuming a lot of their functionality. Fitbit has to engage users in these competitions where friends and coworkers are trying to outdo each other in terms of steps. So it really comes down to the experience that Fitbit brings to their customers and the value add. A lot of that is going to come through the software.
Experience, but I would also imagine fashion starts to play a role in all of this as well.
Oh, there's no question. And when you think about wearables, I mean, these are, this is technology that you wear on the skin. So it has to be attractive. It has to be comfortable. The fashion market's very important. Fitbit's partnership with Tory Burch was quite successful, and I think has really awakened the company to the importance of design, which is going to become increasingly important in differentiating devices from one another as the low end becomes commoditized over time.
And Ed, one more quick question for you. What do you think the biggest risks are for Fitbit? I mean, we've seen several suits from Jawbone, competitor Jawbone. Is that the biggest issue there, or are there other risks that investors should be keeping in mind as the stock becomes publicly traded?
It's a great question, but lawsuits in technology are not always the biggest threat. This is an innovate, not litigate market. So for Fitbit, their challenge is going to be to defend their leading market share against what is likely to be an extraordinarily crowded market, both at the low end and also to establish a value proposition that doesn't just get subsumed into an Apple smartwatch. A lot of what they're doing now with corporate wellness programs is key to this, but it's my view that over time they'll need to develop a platform that opens up to third-party developers and third-party applications so people look at Fitbit really as a central technology platform for all sorts of fitness. So right now it's an appliance. They're certainly doing a really good job of executing up until now. So the test in the public markets will be their ability to execute over the next few quarters, and I think it's a really important time.
Well, on that last point you just made, I guess we're going to have to potentially plan on putting another developer day from another tech company on our annual calendars. Ed McGuire, thanks for joining us today. Thank you for watching.
Great. Thank you, Morgan.
I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.